When we talk about passive income, what majorly comes into our mind? Passive income triggers a thought of retirement for many people. We tend to think that passive income is what we are using when we get old and retire from employment. But that is not correct. Passive income is the money that you generate or the money that flows into your account, which does not require your resources. Money that generated and deposited in your account or credited in your account without using your current resources of time and resource of money, resource of skill, because all those resources that were needed were input into that system at the beginning. So in essence, passive income is the income generated from a system that you have established and does not require further addition of capital, resources, of time, money. So in this case, when do we start building that passive income? Now that we have an understanding that passive income doesn't relate to old age, doesn't relate to retirement, but it's a fact that when we retire, we will need a passive income. We will need to rely on systems that we build when we were younger, when we were more active. And I want to use that word active because active input of resources is using your time, using your skills to generate money. It's a continuous utilization of your current resources in order to make money. That is active income. While passive income, you don't need any active resource in order for that money to keep flowing. Then let's look at the retirement versus our younger years when we are active in force. In retirement, one, we have no ability to generate money actively, or 80% of our ability to generate money actively has already worn out. And that's, in essence, we are trying to say we become more of a liability as we age. So long, because what doesn't put money into your account, what doesn't give you money, is a liability. So as you age and retire, your active sources dwindle down or kind of get exhausted because you are not doing what you're supposed to do, and maybe the capacity to do it is no longer with you. So you become of a liability. All liabilities that we have in our lives, because liabilities give us joy, give us pleasure, give us convenience. For example, a vehicle, a personal car, is a liability because it doesn't generate money. But you can imagine the amount of convenience that you get from your car, an enabler of moving from point A to B. The privacy, if you value the privacy that a car gives you, but the car doesn't make money, it's a liability. But because of its importance, its value in our life, then we need assets that fund this liability. In order for the car to remain useful for us, that car needs gas. That car needs monthly maintenance. So there has to be a flow of money that enables this car or gives the car its value, to give us the convenience, to give us that privacy, to commute us from point A to B. So the same way with ourselves, when we retire, we become more of an asset, a liability, because we are not generating money. And for that reason, we shall require assets that generate money to fund us, our bills. You need your living expenses to be catered for. You will need this car fueled. You are going to need your house maintained, because house again doesn't make money. So in some sense, the house becomes a liability to you. So for that reason, we are building assets over time. So passive income doesn't relate to old age. It only becomes useful in our old age. So the question is, when do we start building passive income? And when does it become material? To start building is just a question of when should one start accumulating or acquiring assets that generate that income. Materiality is a concept in finance and accounting which measures the importance of a figure, importance of an amount. For instance, if one was calculating or preparing an income statement, that statement that will give you your profits, would say if an expense that was left out from that statement, an expense that was understated, instead of indicating 100,000, an error, you indicated 10,000. We will say that this error or the amount of expense that has not been included in this statement is material or measured to determine its materiality or its effect if when included back in the statement it's significant or it can change the reported value from a profit back to a loss. An income that has been understated or left out from that report will be considered material if the reported loss can be converted back to a profit if we include that figure, or it can change our ratios. The effect is what makes an amount material. When it comes to passive income, your passive income amount will be material if it can replace a bill. It is material if it can pay one of my bills, significant bills. My passive income is material if it can sort my rent expense. It is material if it can pay my groceries. It is material if it can take one of my portfolio of expenses and cater for it. So it's a question, or it's a thinking or a mind shift that passive income should be material or big enough to cater for our living expenses. And the question of old age retirement comes in as an important in that by the time you retire, by the time you lose your value, the assetness to generate active money, you should have amassed enough assets that are generating a huge amount of money, huge enough to cater your expenses. That is material. Because if you look around, depending on your age, because those are in the equation of when to start and the resources available, we have messed up the system by creating an impression to people that passive income can only be created when there is money. But no, it requires an analysis of the resources that are at your disposal. You look inward, identify the resources that you have, and look at how you can package that into a system. Look at how you can utilize that and make money. For example, one has the most important resource of time. And critically speaking, the most difficult part to be understood by many is the concept of passive income is, in fact, when we are talking of passive income, it is not the money element. It's not the money question that we are trying to answer. We are answering the question of time. Time is the resource that we are looking at to save. Time is what we need. In passive income equation, that financial freedom, we are looking at the aspect of time. We need our time. Because when we say money that you can make while sleeping, when you are sleeping, you are spending your resource of time. It's not money that you're using to sleep. It's not your skill that you're using in sleeping. It is time. The rich have abundance of time. That the distinction between the rich and the poor is a question of time. We are looking at freeing our time from doing. You must be doing active work to generate active income. So when we are talking about the question of time, we are not looking at an idle person. We are not looking at an unemployed person. No, we are looking at a person who is engaged actively to generate money. So the rich is a question of the time. Using the money to create free time. Using money to free your time in order to pursue adventures, in order to pursue things that gives you more value, make you happy, things that you feel happy while you are doing them. Why is it, or how does it come in employment? The pay goes up if you are managing other people below you. It's not about the people, it's about the hours. A manager will look at their number of hours under him. If you are a manager who is managing 10 people, these people are putting in 8 hours per day in that job. So in total, you are managing 80 hours per day. So this individual under you that you are managing, who is only putting in 8 hours, there is no way he will be paid an equal amount to a person who is managing 80 hours. So the only question is about time. It's about time. It's not a question of money. So in financial freedom, we are looking at, or passive income, we are looking at the amount of time that we can free from 9 to 5. The amount of time that we can free. So old age, retirement becomes of little essence. In retirement, all the time is at our disposal. So there is no time to free in retirement. The amount of time that we want to free is during our active years. We want to run away from 9 to 5. We want to free our time in that gap. We are not freeing time at night unless you are working in the night. So, active income is the building of assets or systems that generate money that you can use to fund your expenses so that you don't have to sell. You don't have to give away all your hours, all that time. We need to make enough money so that we free time to spend it on other things that we love doing. That is the essence of passive income and financial freedom. It's not the question of money. So with that, how do we build passive income? It's not a question of money, it's time. So now you identify what you have. Because passive income should not use your time. Passive income should not continue using your money. Passive income should not continue using your resources. It's a system that once you establish, it continues giving you money without utilizing you, your time, and other resources. A good example of passive income is a book, a copyright work. You gather the information that you have, package it into a book. Your book can either be a physical book or an ebook, where an ebook is a digital product. An ebook is a soft product. Now, if you place a book on a bookshop, that book does not require any additional resource from you, any additional work, additional time from you in order for it to generate money. If you order or if you put the information, package it into a book and give it at a price, that is a commodity or a system that can continue giving you money without your additional input of resources. So how much information are you dispensing without attaching value to it? If you package that book in the form of an ebook as a digital product, give it a value, a price, it can continue giving you money without your additional input. That is passive income. If you use your smartphone, You have your time, little money. Package your information into a video, a nice video, like this one that I'm giving you right now. Then that video, upload it on YouTube or any other social media platform and monetize it. It forms a nice billboard. It's an advert platform. Then if you get monetized, you continue receiving money without putting a lot of your additional input on the same information. So when we say a salary is a means. It's a tool. Your current resources, including a salary, becomes a resource because you have converted your time into money. So when we categorize your resources at the moment, we will not look at time because time, you have already sold your time in employment arrangement. So it's the money that you receive from employment that replaces this time. Then you have your skills because you don't sell skill. You have the information that you have. How you have a mobile phone, you have all those things that we give them value. Then identify how can you package, how can you use your current resources. Build a system that gives you money. This money that comes with minimal additional resources from you, that is what passive income is. So passive income is a time giver. Passive income releases your time as a resource that is engaged actively to generate money. So financial freedom need not be a question of when you retire. It is a time of when did you start building. When did you start building your assets, those systems that give you money? Whatever gives you money, that is an asset. Whatever consumes your money, that's a liability. A combination of an asset and liability, things that give you money and also consume part of the money. In terms of cost management, we call them one a profit center, the other one is a cost center. But that's more than what we need for this information. So your passive income generation, what you are looking for is not money. We are looking at freeing our time. It's freeing our time, freedom. Choosing to use our time the way we would wish, because another system is funding our expenses. Because when you choose to use your time doing other things, that you relieve yourself from actively generating money because you have bills, you have a life to be funded, then you become a liability. Any liability to have value should have an asset that is funding it. The systems that you have created to bring in that income to fund you, that is passive income. So passive income is not about retirement. Passive income is about your active 9 to 5. How much of time can you relieve from that engagement to use it on the way you would want to spend it, because you have replaced with other systems. You look at other things that you can monetize, other resources, how you can build money or systems that are giving you money without committing your time 9 to 5. That is passive and freedom. Freedom is not about retirement. Retirement is your free time, given free time. But the question of whether you will be enjoying in your retirement, the question of your happiness in retirement is subject to what you did when you were active. The question of how you will spend your time in your retirement is subject to what systems you build in your active days. You will continue doing hard labor to generate money to fund your lifestyle in old age if you didn't build enough systems when you were young. One important aspect at this time is when you are young, you have fewer responsibilities. You have fewer expenses. You have the time, or exchange the time for money. You can use that one as a package and start building systems. You build as much as you can when you are young. It will freeze your time at your prime time that you can use to do the much you can. That information, if it is important for you, which I believe it is, share it to other person. Give me a comment in the comment section. You can give me a thumbs up for that video. Those parameters will be very important for the algorithm to share that information to other people. Thank you for watching, and let's meet next in our next video when we are looking at how we can help or create income for our old age if we didn't build much during our active time, or converting an asset rich but cash flow poor scenario in old age. Thank you.